Welcome back to Mid Cap Radar. Well, one stock from the broader end of the market and one company that delivered very strong Q1 numbers just a couple of hours ago was DEE Development Engineers. Now, this particular stock, post the results that came in at around 11:30, the stock has surged almost 15%. We are now joined by the management, Krishan Lalit Bansal, the chairman at DEE Development Engineers, to explain the numbers to us and the way forward. Thank you so much, Mr. Bansal, for joining us. First up, quickly, if you could tell us, what exactly worked for you in the quarter gone by, what led to the sharp increase as far as EBITDA margins is concerned, and a few hygiene numbers. What was the order inflow, and what does the current order book stand at?
Yeah, thank you so much. Thank you so much. So let me begin with this thing that we really had put up a good show in quarter one. Major reason for that is that we had a very solid order book in hand, and the things which had been anticipated, they are moving exactly as per that. The new facility is almost ready. We are likely to announce the major expansion of that also very shortly. And of course, the new facility which is already operating, and it has started giving us dividends, which has helped us to improve the numbers. And at present also, the order book in hand is more than 1230 crores approximately, I'm saying. So we are quite secured for the full year, and whatever projections we have given earlier, we are absolutely on track as on date to maintain that.
Okay, so Mr. Bansal, two-part question here. Can you reiterate what the growth plan or target for FY26 is in terms of top-line growth and margins as well? And second, when you say the new facility has started contributing, and that is something that you saw in this quarter, what was the total contribution from the new facility? How much do you think it will contribute by FY26? And has it come at full capacity utilization? If not at full capacity utilization, what kind of contribution will it make?
The anticipation was that we should be doing almost around 200 crores from this facility in this fiscal, and we are all, I will say that almost on track to maintain that with almost I will say 50 to 60% capacity installed, and when the full capacity is installed, we are targeting around more than 300 crores of revenue from this particular facility alone, and this is what it is.
So it will be in this year itself, you will do 300 crores?
This year we shall be doing more than 200 crores out of this facility, because this is not fully commissioned as yet, and we are operating, we have been able to commission the capacity of almost around 60% of the total capacity, which is likely to be there.
Okay, Mr. Krishan, first up, just a quick clarification. The new facility that you're talking about is the Anjar facility, right? And did it come on stream in January? You said last time there was a bit of delays due to the early months.
No, that January is, for our new unit, which is for seamless pipe plant, which we are putting it over there. But
okay.
Fabrication unit, which we are constructing from last 2 years, and we commissioned the first phase, I think about 9 months back already. So I'm talking of that. But that also is on track that within January, we shall be able to commission that seamless pipe plant also fully operative.
Okay. So, one more question. You said that currently you're sitting on an order book of close to 1,200 crore. So with that order book, what is the kind of visibility that you have? Does it extend beyond FY26? And when it comes to new order inflow, Q1, what was it? FY26, where do you expect, or what kind of ordering are you expecting to book?
So we were able to book almost around 320 crores worth of orders in Q1, and also build almost the same amount. So, practically, we had set a target that we shall be keeping our order book above 1,000 crore at any given time, and we are well on track for that. And out of this 1,300 crores also, we shall be carrying forward at least 400 crores worth of orders from that itself. Plus, many orders are in the pipeline, and the projections which earlier given are absolutely on track. Again, I'm saying time and again, but we do not see any reason that the order inflow should hamper or it should slow down. The things are moving exactly the way we had planned, and with all the things, other things in place, we are quite well placed to have a very robust year-ending results also.
You know, the last time that we had spoken to you, you had indicated that gross margins were under pressure because of the order mix that you had. But this time around, there's an improvement in gross margins to 67.6%. Your margins have improved to 16% versus 13.4%. What is the order breakup currently? The new orders that you're getting, are these high margin orders? Will you be able to do the Q1 margins of 16% in FY26 overall?
Yeah, that's the target. Our target is even more than that. What we have projected is.
Can you quantify that for us?
No, we have been saying that we should be hovering around anything between 18 to 20% of EBITDA margin. We have been telling this right from the day one, and we are still maintaining that. And our Q1 is always on a very, very leaner side. And we start picking up after Q1, so our Q2 is likely to be much stronger than Q3 than Q4. Last time we were down in Q3, but that was an exceptional thing. This is not going to happen this year and under any circumstances.
Okay.
So that's the case.
Okay. A couple of questions, Mr. Bansal. First up, EBITDA margins. Earlier you had mentioned that you're targeting the 20% range, 16% currently. End of FY26, where do you expect that? And secondly, post IPO, one of the reasons you had done the IPO was to reduce debt. So where does the current debt stand at, and what are the debt reduction plans, especially with the kind of capex that you have lined up?
The debt levels have not increased. We have not gone in for any new debt per se. So exact numbers, I'm sorry, I don't have right now. But what I can say broadly is that, the numbers have not increased. Debt has not increased. The utilization of already sanctioned debt might have increased, but at the same time, there has been repayments also. So I don't think there would be any increase.
So, Mr. Bansal, what is the absolute debt currently?
Pardon?
What is the absolute debt number currently?
It should be around 300 or 400 crores. Again, I'm saying I might be wrong in this, so I really will not be able to.
So, do you have any plans to reduce debt this year itself? What's the plan with cash flows?
The cash flow, there is a substantial increase going to happen in the cash flow, but since we are still in the expansion phase, we are still going to invest in the pipe plant also. Otherwise, all other major capex is over. So the overall, the capex at the end of the year will be slightly more than the previous year. This is what I can tell you.
Okay. Mr. Bansal, thank you so much. The street clearly likes the kind of results that you've shown in Q1 and the commentary that you're giving for the rest of FY26. We'll expect more numbers from you when you join us next time around. Thank you once again for joining us. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.